Bitcoin network is characterized by its security and decentralization, but like any technology, it is not immune from risks. For one, Bitcoin's code is stable and difficult to change. One could say it is ossified, and this is by design. Any alteration requires consensus by the network, so if an upgrade is needed to fix a bug or react rapidly to new technology, like quantum computing, the slow development process could leave the protocol vulnerable. While other blockchains regularly have forks or software upgrades, Bitcoin rarely does so. When it does, changes are implemented via soft fork, meaning nodes that do not upgrade can still function. Hard forks, on the other hand, create entirely new blockchains. Because Bitcoin seldom forks, solutions can be delayed or create divisions within the community. Bugs are also a risk, as two occurred earlier in Bitcoin's history, requiring patches to be implemented. The problem can be mitigated by keeping the software simple and continuously reviewing the code, and it is less likely to happen now. However, any vulnerability could lead to loss of confidence in the assets. Then there is quantum computing. Bitcoin's encryption relies on cryptographic algorithms, but future quantum computers might eventually break these defenses. Currently, this threat is still theoretical and potentially decades away. But if the technology advances faster than expected, upgrading Bitcoin may not be easy due to the ossified code and the need for consensus. Another potential risk is miner centralization. Bitcoin relies on proof-of-work mining, but the hardware needed to solve cryptographic puzzles and get rewarded with transaction fees and Bitcoin is expensive. This means that mining power tends to concentrate in large pools in regions with lower cost electricity, while the hardware is produced by only a handful of manufacturers. If a small group of miners were to control over 50% of the network, they could launch an attack and rewrite parts of the blockchain, double spending coins and disrupting the network. However, the price of Bitcoin would most likely fall, and the attackers would erode their own profits. The last risk is competition. While Bitcoin is the largest and oldest network, there are newer, faster entrants such as Ethereum, Solana, and Layer 2 solutions built on top of Layer 1 blockchains. These protocols are more centralized, but also faster, smart contract enabled, and all generally offer greater flexibility. The risk is that if Bitcoin fails to adapt, its dominance could be eroded. All that said, Fidelity Digital Assets research would argue that Bitcoin serves a different purpose to other blockchains, as it is the most secure, decentralized, and has a maximum supply cap, making it an ideal monetary good. In the conclusion of our About Bitcoin series, we'll review the unique characteristics that contribute to Bitcoin's value.